Welcome to the deep dive. Today we're tackling wrapped Bitcoin, or WBTC. If you've been exploring, the DeFi world on Ethereum, you've probably seen this term pop up.
Exactly. And if you hold Bitcoin, you're thinking, well, what can I do with it beyond just holding, especially on Ethereum? WBTC as well. It's a super interesting bridge.
Right.
So our aim today is to really break down what WBTC actually is, how it all works, and crucially, how it stacks up against just holding regular Bitcoin native BTC.
Precisely. And we're drawing on some great insights from the TeleSwap team's piece, What is WBTC and how does it differ from native BTC? So yeah, if you've thought about maybe putting your Bitcoin to work in Ethereum DeFi, this should be helpful. Okay, let's just jump in. Fundamentally, what is WBTC?
Okay, so at its core, WBTC is an ERC20 token. That means it lives on the Ethereum blockchain. And it's designed really carefully to keep a one-to-one value peg with Bitcoin.
So one WBTC should always equal one BTC in value.
That's the goal, yeah. Think of it like Bitcoin, but dressed up in Ethereum clothes so it can interact with everything there.
Okay, so taking Bitcoin's value and making it compatible with Ethereum.
That's a really good way to put it. The article calls it wrapping.
Huh.
Basically, you take actual Bitcoin native BTC, lock it up securely with a custodian.
A custodian, like a bank.
Sort of, yeah. A specialized crypto custodian. They hold the BTC, and then an equivalent amount of WBTC tokens gets created or minted on the Ethereum network.
Minted.
Yeah. And that whole mechanism is what lets you use Bitcoin's value inside all those Ethereum DeFi apps.
Okay, so the actual Bitcoin stays safe on its own blockchain, but its value gets represented and can, operate on Ethereum with all its smart contracts. That definitely opens doors.
Absolutely.
The article says WBTC is bringing Bitcoin to the Ethereum world. Could you unpack that a bit more?
Yeah, it really acts as a bridge, doesn't it? It transfers the value of Bitcoin over to the Ethereum environment, and once it's there, it's just like any other ERC20 token.
Meaning it can.
It can plug into decentralized exchanges, lending platforms, yield farms, you name it. Anything built with Ethereum smart contracts can potentially interact with WBTC.
Got it. Okay, so how does this actual wrapping, and I guess the reverse, the unwrapping, how does that work mechanically? Let's get into that mint and burn process.
Right, so the article breaks down this mint and burn cycle. Say you have some BTC and you want WBTC. You typically go through what's called a merchant.
A merchant, okay.
You send your BTC to them, or rather to the custodian via the merchant's instructions. The custodian holds that Bitcoin securely in reserve. Once that's confirmed,
To check it's really there.
exactly, then the equivalent amount of WBTC is minted, just created out of thin air essentially, but backed one-to-one on Ethereum and sent to your Ethereum wallet.
Minted, okay.
Okay.
Like creating new tokens based on the locked BTC.
Precisely. And then when you want your Bitcoin back, you reverse it. You initiate a burn process for your WBTC.
So you destroy the WBTC tokens.
You got it. You effectively destroy them. The system verifies the burn, and then the custodian releases the equivalent amount of actual Bitcoin back to you.
Ah, yeah.
And it's this constant minting when BTC comes in and burning when WBTC goes out that maintains that crucial one-to-one peg.
That makes a lot of sense. It's like a balancing act.
Yeah.
Now, you mentioned custodians and merchants. The article goes into these roles. Who are they? What do they do?
Yeah, they're key players. The custodians, BitGo is a major one they mention, are the entities actually holding the reserves of real Bitcoin that back all the WBTC out there. They're like the vault.
Okay, the vault keepers.
Right. And the merchants, they mention examples like Kyber, AirSwap are the ones you as a user usually interact with. They handle the user-facing side of minting and burning WBTC.
So the merchants are the facilitators.
Exactly. They connect you to the custodian's process. It's generally the merchants who handle things like KYC, know your customer checks to meet regulations.
KYC.
And one really important point the article makes, only these approved merchants can actually initiate the redemption, the burning of WBTC to get the underlying Bitcoin back from the custodian.
So not just anyone can burn WBTC and get BTC. It has to go through these authorized merchants.
That's right. It adds a layer of control and, well, centralization, really.
Interesting. Okay, so there's this structure. Now, once I have WBTC, it's on Ethereum. How does that change things compared to just holding BTC?
Well, being an ERC20 token has some significant implications. First, you generally get faster transaction confirmations than on the Bitcoin network. Think like 15 seconds for an Ethereum block versus 10 minutes typically for Bitcoin.
Big speed difference.
Yeah, though Ethereum speeds can vary with network congestion, of course. And importantly, you'll pay transaction fees, gas, in Ether, not Bitcoin, when you move WBTC around or use it in
We're already
apps.
going to have some ETH for gas.
But the biggest advantage, arguably, is that WBTC can seamlessly interact with Ethereum's smart contracts and the whole DeFi ecosystem built on top of them.
Which brings us to the main attraction for many Bitcoin holders, right?
Mhm.
Using their BTC value in DeFi. How does WBTC make that possible?
This is really where it gets powerful, because it's just another ERC20 token. DeFi platforms on Ethereum already know how to handle it.
So it just slots right in.
Pretty much.
Yeah.
Think decentralized exchanges, DEXs, like Uniswap or SushiSwap. You can trade WBTC for ETH, stablecoins, other altcoins easily.
Without a centralized exchange intermediary.
Exactly. Or look at lending platforms, MakerDAO, Compound, Aave are big examples. You can deposit your WBTC as collateral and borrow other assets against it.
So you don't have to sell your Bitcoin if you need liquidity or want to leverage it.
Precisely. Avoids a potential taxable event, lets you keep your exposure to Bitcoin's potential upside, but still lets you access funds or participate in other DeFi strategies.
What about earning yield?
Yep. Yield farming is another big one. You can lend out your WBTC or provide it as liquidity in pools on DEXs and potentially earn interest or trading fees. The article even mentions an example yield of around 3% back in late 2020.
Earning a return.
And sometimes you get extra rewards, like governance tokens from the platforms themselves. COMP from Compound is an example they give. It lets your Bitcoin work for you in ways it just can't when it's sitting idle in a native wallet.
It really does sound like unlocking Bitcoin for this whole other financial system. Now, the article has a helpful comparison, BTC versus WBTC. Let's break down those key differences, starting with the tech underneath.
Okay, so native BTC runs on its own blockchain, proof of work, famously no complex smart contracts natively. WBTC, as we said, is an ERC20 token on Ethereum. Ethereum has its own blockchain, its own consensus moving towards proof of stake, and crucially, smart contracts, and usually those faster block times we mentioned.
Right. Then custody and how it's issued.
Big difference here. With native Bitcoin, you can hold your own keys. Self-custody, no custodian needed unless you choose to use one. WBTC, however, requires those trusted custodians holding the actual BTC, and it's issued via those merchants. You're inherently trusting those intermediaries.
That trust element seems key. What about security?
Bitcoin security comes from its massive decentralized network hash rate. It's incredibly robust, never been successfully 51% attacked. WBTC's security is sort of layered. It relies on Ethereum's network security, which is also strong, but also on the security practices of the custodians holding the Bitcoin reserves.
So there's an added layer of risk there.
There is. It introduces counterparty risk. What if the custodian gets hacked or fails? Coin Bureau's note they mention is relevant. WBTC gives you liquidity and DeFi access, but you trade off some decentralization for that custodial risk.
A crucial trade-off.
Okay.
And finally, the different use cases the article highlights.
Yeah, they're quite distinct. Native BTC excels as a store of value, digital gold, peer-to-peer payments, long-term holding, where security and decentralization are paramount.
The original vision, really.
Right. WBTC is specifically designed for DeFi on Ethereum, using Bitcoin's value for lending, borrowing, yield farming, trading on DEXs, providing liquidity all within that Ethereum ecosystem.
So just to hammer it home, WBTC isn't Bitcoin itself. It's a representation of Bitcoin on Ethereum. But critically, it's redeemable one-for-one for actual BTC, which provides transparency.
Exactly. That redeemability is key to the peg. But it contrasts sharply with holding native BTC, where you're in full control, no intermediaries needed.
Right. Okay, let's dig deeper into those specific DeFi use cases. The article gives some concrete examples.
Yeah, it really helps illustrate the possibilities.
So lay them on us. How are people actually using WBTC in DeFi?
Well, like we touched on, using it as collateral is huge. Platforms like MakerDAO, Compound, Aave, they let you deposit WBTC and borrow stablecoins or other crypto against it. So Bitcoin holders can get leverage or cash flow without selling.
Accessing liquidity without letting go of your BTC. Makes sense. What else?
Yield farming and earning interest, definitely. Lending WBTC on these platforms or adding it to liquidity pools on DEXs like Uniswap. You earn interest, maybe trading fees, potentially those extra governance tokens too.
Passive income potential on your Bitcoin.
Exactly. The article mentioned that 3% figure from late 2020. Obviously, yields fluctuate wildly, but the possibility is there. It puts an otherwise passive asset to work.
Okay, and trading.
Big one. Trading WBTC directly on DEXs like Uniswap or SushiSwap. Swap it for ETH, USDC, DAI. thousands of other ERC20s without needing a centralized exchange account, KYC, withdrawal limits, etc. Much more seamless within DeFi.
Increases the options dramatically. What about these cross-chain swaps the article mentions?
This is interesting. Platforms like TeleSwap, which the article is from, facilitate this. You could, say, swap USDC on Ethereum directly for WBTC, or even swap stablecoins directly for native BTC without necessarily needing KYC on an exchange, depending on the platform.
Bypassing traditional on-ramps, potentially.
Kinda, yeah. And you can also use these bridges to go the other way, unwrap your WBTC back into native Bitcoin on the Bitcoin blockchain. That flexibility is pretty powerful.
Definitely. The article also quickly mentions using WBTC as collateral for stablecoins and in DeFi aggregators.
Right. Some decentralized stablecoins might accept WBTC as part of their collateral backing, and yield aggregators, think Yearn Finance or Harvest Finance, often have automated strategies, vaults, that utilize WBTC pools to try and maximize returns for users who deposit WBTC.
So it plugs into those more complex strategies too.
Yeah. And TeleSwap makes a point about the attractive yields that have drawn so much value in. We're talking billions of dollars worth of Bitcoin locked up as WBTC and Ethereum DeFi at various points. It's not a small niche.
Billions. Wow. Okay, so if someone's listening and thinking, all right, I want to try this, how do they actually wrap BTC into WBTC or unwrap back?
The standard way, as the article outlines, is through one of those merchants we talked about, AirSwap, Kyber, etc. You initiate the process, send BTC to the custodian's address they provide, they verify, mint WBTC to your Ethereum address.
And going back.
Similar process, reversed. You contact the merchant, initiate a burn transaction for your WBTC, they coordinate with the custodian, and the custodian sends the BTC back to your specified Bitcoin address. Worth noting, there might be fees for unwrapping, even if minting is free.
Okay, fees to consider. Are there other ways besides these merchants?
Yeah, the article points out that major centralized exchanges like Coinbase, Kraken, Bitfinex often list WBTC, so you can just trade for it directly on the exchange market.
Oh, just buy it like any other token then.
Exactly. And then there are decentralized bridges. TeleSwap highlights their own app as a trustless option for swapping between chains. They specifically mention using Bitcoin light client bridges.
Light client bridges. What's the significance there?
So a light client is like a lean way to interact with the blockchain. It doesn't need the whole history, just enough to verify transactions relevant to it. Using these for bridges aims to make the process more decentralized and secure, potentially allowing users to keep control of their keys throughout the swap, unlike centralized methods.
More trustless, potentially more secure.
That's the idea, yeah. Reducing reliance on single intermediaries.
Okay, several paths then. Let's circle back one more time to security and custody. Really nail down the difference. WBTC versus BTC.
Okay. Native Bitcoin. Security based on massive hash power, proven track record, full control via self-custody of private keys. You are your own bank, essentially, if you hold your own keys.
The gold standard for decentralized security, arguably.
Right. WBTC security relies on both Ethereum's network security and the security of the centralized custodians holding the Bitcoin reserves. Plus, trust in the merchants facilitating the mint burn.
So multiple points of trust and potential failure.
Exactly. Custodian hack, custodian failure, merchant issues. These are risks inherent to the WBTC model that simply don't exist with self-custodied native BTC. Coinbase summary again. You get liquidity, DeFi access, but at the cost of introducing centralized custodial risk.
It's that fundamental trade-off. Decentralization and self-sovereignty versus access and functionality on another chain.
That's it in a nutshell. The article is clear. WBTC is super useful for DeFi, but if maximum security, censorship resistance, and trustlessness are your priorities, native BTC held in your own wallet is still the way to go.
Got it. Now, the article does spend a bit more time on bridging specifically with TeleSwap. What's their angle?
Well, naturally, they position their own solution, TeleSwap, as a more trustless way to move value between Bitcoin and Ethereum DeFi. Their app.teleswap.xyz is built for these cross-chain swaps.
And what can you do with it, according to them?
They give examples like swapping ERC20 stablecoins directly for native BTC sent to your Bitcoin wallet, or bridging BTC from Bitcoin to Ethereum, receiving WBTC or potentially other tokenized Bitcoin forms. They really emphasize their use of those light client bridges for security and maintaining self-custody during the process.
So they're advocating for a decentralized bridging approach.
Yes, they encourage users to try it out, suggesting you can connect with an Ethereum wallet like MetaMask or OKX wallet. They claim potentially lower fees and no KYC for swaps into WBTC or native BTC via their bridge.
Interesting. And they mentioned wallets.
Yeah, they point to their blog for info on secure Bitcoin wallets to receive bridged funds, mentioning their academy recommends wallets like Xverse or Lether specifically.
Okay. Useful pointers for anyone wanting to explore that specific tool. All right, let's wrap this deep dive up. What are the absolute key takeaways for our listeners about WBTC?
I think the main thing is WBTC is a really clever mechanism, a bridge that brings Bitcoin's immense value into Ethereum's DeFi playground that unlocks loads of possibilities. Earning yield, collateralizing loans, DX trading.
Huge potential there.
Definitely. But it comes with trade-offs. You're swapping Bitcoin's native trustlessness and self-custody for reliance on custodians and merchants. It's a different risk profile.
So weigh the DeFi benefits against those trust and security considerations.
Absolutely. Understand how it works, understand the risks involved, understand it's not native BTC, even though it represents its value. Then you can make an informed decision about whether using WBTC fits your goals.
Excellent summary. It really highlights innovation, but also the complexities as these crypto ecosystems start interacting more. Okay, here's a final thought to leave you with. As DeFi continues to evolve, how might these trust models for wrapped assets like WBTC change? Could they become more decentralized? And what new kinds of opportunities might that unlock for Bitcoin holders down the line? How important will decentralized bridging solutions be in that future? Something to ponder. Thanks for tuning in to this deep dive.